Go FICO, go FICO. You can be our friend, you can be our friend, go. Greetings, I am Makeba Evans, your Keller Williams real estate agent and a Home Just For Me Properties. In this video, I'm going to share some important information about the ever so influential FICO Score. Ready? Let's go. FICO scores are used for most consumer lending in the United States. There are several FICO scoring models, and each uses a slightly different algorithm. Now, where do they get the information for this all be, all know, all decisions made because of what is shared FICO score? TransUnion, Experian, and Equifax, of course. Some of your creditors report to all three, two, or one credit bureau, and this is the reason why. Many times your scores are a little bit different or a lot of bit different. Here's a tip. Before you apply for credit, contact them and find out if they report to all three credit bureaus. That is going to benefit you, and that is why you are applying for credit, so the creditor will report your great payment history to the credit bureaus. Your FICO score determines your credit worthiness. You get a credit card, you get a car. The interest rate is going to be high as hell, but you could have it. Yes, you can rent my house, but you have to pay 10 months deposit. You can buy this house at a low interest rate, but not you. So, the range of the FICO score is 300 to 850. Your score is based on 5 factors. Payment history is 35%. Credit utilization, that's 30% of your score. Credit age is 15% of your score. Credit inquiries is 10% of your score. And so is the mix of credit that you have. So of those 5 factors, the 2 that impact your score the most, and you should pay closer attention to, are your payment history and your credit utilization. So payment history, if someone is flipping through the book of history, how would it read? How many credit cards do you have? How many loans do you have? Do you make timely payments or late payments? Credit utilization. It measures the amount of available credit you are using and its ratio to the outstanding credit card balances that you have in regards to your credit card limits. And a safe place to live in credit utilization land is 30%. So if you have a credit limit of $1,000, then $300 is your safe zone for your 30% credit utilization. Your credit age. And it is a very simple calculation. You divide the age of your oldest and your newest accounts by the total number of accounts that you have. So the longer you've been using credit, the better your credit age will be. So our mature generations have a head start because they've been using credit for a while now. It is not a good idea to close accounts that are on your credit. The older accounts, especially if they're in good standing, soon will be great accounts. So don't remove them. Tip: creditors will close accounts that are not being used. We need credit history, especially if it's good. So find out how many months that is. And don't allow that much time to pass. You know, every once in a while, put some gas on your car or groceries and pay it off, but keep your credit open. Credit inquiries. Anytime there's a credit check, that's a credit inquiry. There are 2 different types of inquiries. We have hard, which means you gave permission because you were applying for credit, and a soft inquiry. That happens when creditors are peeking at your credit worthiness. And after that happens, that's when you get those envelopes in the mail saying you are pre-approved for this credit card. So too many hard inquiries in a short period of time does not look good to a lender. Our final element of your credit score is a credit mix. An ideal credit mix includes a blending of revolving and installment credit. Generally, there are 4 different types of credit accounts you may find on credit reports. We have installment loans. It's a car loan. That's an installment loan. There's the same payment paid every month with interest and the account is closed once your car loan is paid in full. Revolving debt. Now that's a credit card. You can pay back every month in full. If you don't pay in full, then interest is applied. You pay your monthly payment with interest, and that line of credit can be used again and again and again until the account is closed by the lender or by you, the borrower. The next type of credit account is a mortgage account, and yes, it is also a type of installment loan. It is significantly longer time span than my previous example of the car loan, but this payment can have a fixed or variable interest rate, and it is paid over time and closed after the term of the loan is fulfilled. Now, open accounts are paid in full every month. That is the fourth kind of account. If you want a free credit report, you get 3 a year. Go to annualcreditreport.com or dial 877-322-8228. I got another tip for you. If discipline is not your friend, you've paid off a card and you want to remove the temptation from using it again, then stick that sucker in the freezer with some water in a jar or a cup. And by the time it thaws out, you would have figured out another way to buy whatever it was that you wanted to buy, or shred that sucker. By the time another card gets there, you would have changed your mind or figured the same thing out. Another way to get whatever it was that you wanted to buy. Whatever your credit history book says about you right now can be changed. Creditor data and inquiries fall off. If your goal is to improve your score, buckle down and make the necessary changes to improve it. Most of us will use credit in our lives at some point to pay for those big ticket items, right? So do what is necessary so that book tells a nice story about you and credit. Not so good things are supposed to drop off your credit in 7 years. Well, that's it on Credit Score. Thank you so much for tuning in. I hope it was full of great information for you. Make sure you subscribe or like it. Feel free to comment, and I will dip in periodically to answer any questions that you may have. Fix your credit score. We can do it. Yes, we can. We can do it. Yes, we can. FICO. Yes, we can. We can do it. Yes, we can. Go FICO. Go FICO. You can be our friend. You can be our friend. Go FICO. Go FICO. You could be our friend. You could